Welcome back to another trade recap. Let's go ahead and jump right into this. Today, again, we had a winner and we had a loser, and I'll show you exactly how I missed out on generational wealth. So if we jump into the charts, this morning when we opened up, swept this 5-minute liquidity, which also happened to be 15-minute liquidity on the morning open. And we came up and we touched into this 15-minute fair value gap when the market shot up. We came up, we took out this 5-minute liquidity right around 8:15 this morning, and on top of that, we broke up into this 5-minute fair value gap here, but the main focus was this 15-minute fair value gap when we tapped, and then we ended up selling off for the majority of the morning. Not until we come down, and on the daily, you can see we have these daily lows, which we ended up taking out, which is also the same lows on this 4-hour chart. So if you look at the trades that I did take, so this is where the lows are that we ended up taking out and sweeping. I didn't take any trades here. Honestly, the best entry for this trade right here would have been this breaker structure with stops below the low of that, and then obviously you could have profited on all of that there. So the trades that I did take, I was looking for a retracement off of that breaker structure up. So we ended up coming up and we took out these highs, which to me signals a trend reversal. So on the 5-minute, we didn't quite break structure on the 5-minute, so we ended up retracing here on the 5-minute. We ended up breaking here at 10:45, which we hadn't quite done that when I entered in for this first one. I was going more off the fact that we hadn't taken out these lows and that we were going to come up and take out these highs. And as you can see, for this first trade, if we break it down even smaller, so my entry was initially going to be off of this continuation, which is where this entry is. So we end up closing up above these highs right here. Typically, to me, that signals a continuation candle. So I would have entered in here, but the moment that this candle closed, as I seen that this candle started to dump, so I waited because there was also this fair value gap here that there was a potential for us to hit, and then we had this rejection. So off this rejection, I waited for this one to shoot red, which I should just waited for the close, and then possibly like maybe just even a green candle would have been more of a signal like here. But instead, I entered in off of when we started to kind of go green again, because I've seen in the past, like obviously you're trying to guess the market or which direction at that point, which you should never do anyway. So honestly, I deserve to lose here to begin with, and overall, today is a very high volatility day, right? And I'm putting up numbers that normally I wouldn't risk on a day-to-day basis. So in all reality, I should be switching to micros and be trading micros right now. But I think for the rest of the week, if the market continues to be as volatile as it is, I will end up doing that. So we'll just see what the rest of the week has to unfold. So with this play, this was a continuation. Really, the breaker structure was down here, which would have been the better entry because we swept these 15-minute lows. And then from there, we ended up breaking structure to the upside. Obviously, you could have entered in there, stops below these lows. And then, I mean, you would have targeted a significant amount, but the reason why I didn't do that was because it was the risk for that was significantly more than what I was willing to give. So with that being said, I mean, obviously I could have just entered in with half the amount of risk with just 5 micros instead of 1 mini, and I mean, I would have been completely fine. And then with that, I could have also trimmed, right? So I could have came up to got these 5-minute highs, which was my first initial entry spot where I thought we were going to get to. And then obviously this fair value gap is kind of questionable, but we didn't end up doing that, right? So we came up, and then with also the reason why we took this trade anyways was we inverse this fair value gap. So from here, the only thing that I see is this 5-minute high or these 5-minute highs for any type of reversal point after this inverse here. This here signaled the rejection candle, which I wanted to get in off of, with stops right below the fair value gap. Again, I didn't think that we were going to close back below it, which we ended up doing so. And then with that, we just took off all the way up, right? So we came up, we took out this 15-minute liquidity, continued to head higher. There was no break structure, nothing signaling to go down, respecting every single fair value gap on the way up, and we didn't quite touch this fair value gap here, which brings me into trade number 2. This is a scalp, and again, we're in with quite a bit of risk. We end up breaking structure here with both NQ and ES. So right here at 10:59, we end up breaking structure to the downside on ES, and right here on NQ, we end up breaking structure. It's this line right here. So with that, both of them are signaling a break structure to the downside, which to me signals a pretty good chance for a reversal, which we didn't end up doing. So we came down, we tapped this fair value. The first time that we tapped it, we ended up rejecting off of it, which I got slightly nervous. So this is where we bring us down into why this was a scalp to begin with, because of this fair value gap. So when we entered, we came down, and this fair value gap to me was a signal of reversal, right? Because we'd have to get all the way down to these lows, or possibly this fair value gap, to bounce off of before continuing higher. On the 5-minute, we had broken structure on the 5-minute to the upside. 5-minute highs to be taken out at some point in time today, as well as getting back up inside maybe this 15-minute fair value gap. And we've already entered in this second fair value gap, but I want to see this top one, because this this one here has already been filled. So really this imbalance here is where my eye would be getting to. And that was 5-minute highs is also these 15-minute highs. So this is kind of the area that I would end up seeing the market get to before I would end up looking for any type of short plays again. But we ended up just scalping this move here because when we had this 5-minute break, there has to be a 5-minute retrace, which I thought it was going to retrace down into this 5-minute fair value gap. It didn't end up doing that before, obviously, we've continued to head higher. So when we got down, we tapped into here. Ultimately, I had started taking off risks significantly sooner. And then when we got down and we tapped this and didn't close below this fair value gap to inverse it with this candle, I just closed it because we already had 1-to-1. Honestly, today, if I had to change one thing and leave a message to anybody that is a beginner, don't be afraid to size down, because ultimately you can hurt yourself in the long run if you don't do that, right? Obviously, you take away the chance to make more money, but you also decrease the amount that you could lose. But it also psychologically could help you because you're not in with as much risk, meaning you're not worrying about what could happen if you lose as much as you were if you were in with twice as much risk than what you probably normally trade with. But with that being said, I'll go ahead and catch you guys in the next one. Peace.
Broken, it's tragic, we're not all elastic, but maybe there's magic. Believe you could have it, and I know of sadness, the anxious and panic, the infinite vastness of all that